Hello everyone, welcome back to my channel. In this latest video, I'm breaking down a trade I took this week on Euro against the Canadian dollar. As always, I applied my bread and butter strategy, which I have previously shared with you here on the channel. Feel free to check it out later. In this particular trade, I used multiple ICT concepts, including the market maker X model and the inverted fair value gap. I utilized the inverted fair value gap to determine the bias on the higher time frame and as a confirmation for entry on the lower time frames. This video has a high degree of educational value and it might just be the one that helps everything click for you. So pay close attention, take notes, and of course, don't forget to hit that like button and subscribe to my channel so you won't miss any upcoming videos. And let's get started. Now, before we start, I just want to clear something out. So how to study the model that I have shared with you here on my channel. What is the roadmap and the appropriate way to study it? All right. First of all, you need to watch, of course, head to my channel and go to the playlists and you will find this playlist right here, live trade breakdowns. Now, first of all, you need to study the full trading plan videos. I have this one, and I have also this one right here and this one. On these videos, I explained and detailed each condition of the trading plan with chart examples, right? So as you can see, they are relatively long, right? Now, after you finish studying these, now you need to study the live trade breakdowns. As you can see, these are relatively shorter videos. I shared here trade breakdowns of trades I took using the strategy that I have shared here. This way you'll see me how to apply this strategy to different kinds of market environments, right, and market conditions. The mechanism is still the same, the logic is still the same, but the market structure is not really identical, right? This is why you need to train your eyes using these videos and see how I apply the strategy on different environments, right? You can also watch this very important video, which is how to pick easy to trade pairs. As you all know, if you follow me on Twitter, I trade multiple pairs. I have 30 pairs to trade, but I only choose 5 or 6 of them to trade during each week, right? And this is how I choose them. I have received a lot of DMs about how to choose pairs, so this video is your answer. Now, this is the second step. Again, watching the full trading plans videos and study them. Next, live trade breakdowns. And the third step is collecting examples by yourself. So you can backtest or go to your charts, log into your charts, and look for setups where this strategy worked perfectly, right? And study those examples, those collected examples every single day. And the final step is you create a demo account or maybe open a live account, right? But use small risk because you are new to this strategy and you don't know what you are doing yet. And now practice there for at least 2 months, guys, at least 2 months. And with these 4 steps, you are ready to trade by your own. Anyways, let's start now with the actual trade breakdown. So here's the trade. I shared that on my Twitter account, the breakdown of that trade. And it was on the euro against the Canadian dollar. And I wrote here that it was the highest probable trade I have taken this month. And you will know exactly why is that. You will see how beautiful the price action was, starting from the monthly time frame all the way to the 5-minute time frame as an entry. And now let's just get started. For this presentation, I'm going to use FX Replay, right? A powerful backtesting tool. You can get 15% off and 5 days free, so you can try it out, right? And decide whether you want to buy it or not. Anyway, let's go here and let's start. We're going to use the monthly time frame as the bias, the overall bias and direction. And what I want you to do is, before I start annotating the chart, I want you to outline what you see on here, right? This is a naked chart. So what can you see? You can pause the video for a second and outline what you see on here, right? So on the monthly time frame, we can see that we have this fair value gap. Let me just zoom in for a little bit. So I told you that price seeks for external range liquidity in the form of swing highs and swing lows and balancing imbalances. That's the only thing, that's only two things price does: seeking liquidity above all highs and all lows and balancing imbalances. On the sell side, right, so on the sell side here, you can see that price took this external liquidity, so this swing low, right? Let me just annulate it here. This swing right here, and balanced this imbalance, right? So on the sell side, price did both. You can refer back to my previous video where I shared how to read the higher time frames and decide whether this pair is directional or not, meaning you can frame only one direction of it. So you can see that on the downside, price did two things: took sell side liquidity from this swing low and this swing low and balanced imbalance. Now, do we have a reason to go to the upside? Yes, we have. We have this filled swing right here, right? We have all this filled swings here, right? So above each swing high right here, there is a pool of liquidity that has never been readed before. So we have a lot of buy side liquidity, buy stops above the swing highs. So there is a reason for price to go to here. Do we have a reason to go to the downside? No, we have already taken this liquidity from here, this pool of liquidity, this and balance and imbalance. There is absolutely no reason for price to keep going down. Price seeks for the least resistance route, right? From here to here, there is resistance. We don't have that much of liquidity. We don't have that much of imbalances, but on the upside, we have a lot of buy stops to target, right? So this is the monthly time frame. So this is the monthly time frame. The monthly time frame is not necessary for intraday trading, but when it's clear like this, you can frame maybe your whole month of trading. For example, on this pair, on the next month or two, you can only take buys, right? This is why I like to look at the monthly time frame when it is clean like this. So I can take only buys and it will be high probable setups only. So this is the monthly time frame, and now let's go to the weekly and see what's going on. So we have this. Let me just remove this, right? We don't need it anymore. Remove this. Now, what do you see on the weekly time frame? Can you annulate something that is interesting, maybe, right? What do we have here? You can pause the video and outline what do you see. So I can see that we have this CB, right? Or bearish fair value gap. This fair value gap should have pushed price to the downside, right? If we were on a sell program, this fair value gap right here, price should have rejected from here and continue to the downside. But this is not the case. As you can see, this fair value gap offered some kind of resistance here, and then price pierced through it and closed above it. So this indicates that we are actually that price actually wants to target those monthly highs that we have outlined previously, right? So this is a confirmation that we have done from the sell side, and now we want to target those clean highs or clean fill swings on the upside, right? So this is an indication of going to the upside, right? These are all for buys, for whether we want to take buys or lows on the lower time frames. Of course, you can take a retracement, but I prefer to go with the higher time frame. So on the weekly, this is all I need. I don't like to make a mess on the higher time frame. I only outline the things that matters the most. All right. So this is the weekly time frame, and now let's move on to another time frame. Let's see what we have on the daily maybe. So on the daily, we can see that, all right, pause the video again and try to figure out what do we have here. So on the daily, what I can see is we have this order block, all right? So again, in a buy program, and we have confirmed that we are on a buy program from the monthly and the weekly, right? And in the buy program, down close candles should support price to the downside, to the upside, right? So it should offer support, as you can see here, this one, after an expansion and closing above these two candles, you can see that they offered support and price just continue here. We have another one here. We have a down close candles, expansion, and returning back to it, offered support and expanding higher. So on the daily, we have this order block that supports the idea of going high to these highs right here, this major pool of liquidity. And this is all we have on the daily. And now let's move on to another time frame, right? Let's go to the 4 hour. So on the 4 hour, what do you see? We have here expansion to the upside, right? So expansion, and then we want to look for retracement to this internal liquidity, a fair value gap, and what comes next, and another expansion to the upside, right? So our whole idea, our buy idea, should be based on this fair value gap right here, and we go to the lower time frames and look for entries, right? So let's see what's going on here. Price is now building liquidity. It is consolidating inside this fair value gap, and we're gonna see something interesting. And here we go. So we have here a sweep of liquidity, right? And immediately price rejected, as you can see here. So again, when you want to go long, you want to see sell side liquidity get swept, all right? And when you want to go low, you want to see buy side liquidity get swept, just like the monthly. As you can see on the monthly, inside that fair value gap, right? So inside that monthly fair value gap, we had that sweep on liquidity on that major low. Let's go back and you will see it clearly. So you can see that price is actually fractal, and what you see on the monthly, you will see it on the 5 minute, the 5 seconds even. So as you can see, we have that fair value gap and we have a sweep on liquidity and then immediately reject. So again, when you want to go buy, you want to see sell side liquidity get swept, right? So just in the 4 hour, we have that. We have a sweep on liquidity, right? On the sell side liquidity and immediately reject. So this is what we have on the 4 hour time frame. Let's go and now let's go to the 1 hour time frame, and remember we are inside the 4 hour fair value gap. So on the 1 hour time frame, what do we have? We can see that we have this breaker block here, right? So this is a breaker block. Why? Because this was the last up close candle before this expansion to the downside, just to take this liquidity from here. And now when we trade above it and close above it, this candle would be a perfect breaker block. We also have this order block, but let's use the breaker block here. So let's move forward. Let me use the 15 minute here. Now we are returning back to that breaker block and that order block, right? Now we tapped into it, and now we want to go to the lower time frames, the 5 minute, and look for entries, right? So you can see that all the time frames are aligned with each other: the monthly, the weekly, the daily, and now the 4 hour, and finally the 1 hour are all pointing to the upside. And now we can go look for entries. This is the final step of our trade, and let's move forward, right? We don't have any indication of going to the upside on the 5 minutes, so we wait, right? We don't take our entry from this breaker block and use a wide stop loss. No, we wait and see what the 5 minute price action is offering us. So now what do you see? Can you see something interesting in this? We have this fair value gap. So again, just like the weekly time frame, that inverted fair value gap, right? So this fair value gap on a sell program, right, on a sell program should have offered resistance for price to go to the downside, but we didn't, right? We pierced through it. So here it offered some kind of resistance, but price pierced through it and closed above it. So this is an indication of that 5 minute is turning from a short-term sell program into a long-term buy program. So this is the first indication of going long. Let's move on. And as you can see, when that share value gap failed to offer resistance, next it will offer support, right? So this could be your entry, and you can target this original consolidation. So this is a market maker buy model, right? So this is a market maker buy model. We have this original consolidation, and we have another accumulation right here, right? And you can target this. So this is the low risk buy. I didn't enter from here. I waited for another confirmation, and let's see what's going on here. So after the low risk buy, we have another expansion, and this is seller bullet, or the second stage of distribution. This right here is the highest probable trade in the markets. So how you can enter this? All you only need to do is to wait for a retracement, and we have that PD array right here, which is a rebalanced price range, and we can take our entry when price retraces to this PD array. So my entry would be here. Stop loss just below this one, because, and as you can see that my stop loss is protected by multiple PD arrays. This one, right? So this rebalanced price range, this order block, and this inverted fair value gap right here. So if price wants to reverse, it needs to go through a high resistance route. And my TP would be 2R right here. We have a lot of failed swings here, right? And now let's move on and see what's going on. So I have been tapped right here, and as you can see, price hit my TP and it went even higher, right? We have another leg right here, so you can even take this leg. And maybe target those hourly failed swings right here, right? So I believe we have come to the end of this video. If you have any questions, please DM me on my Twitter account or leave a comment down below and I'll answer you as soon as I can. Happy trading and good luck.